Let's get to Rick Santelli in Chicago, has some more on what we're all talking about today, and that is market records. Hey, Rick.
Absolutely. Thank you very much, Carl. And I'd like to welcome Chuck Biderman from TribTams on, frequent guest. Welcome, Chuck.
How you doing, Rick?
Good. So, I really respect your intellect. You write some great pieces. You're a smart guy. So if we were sitting around at a table and you had some of your relatives and some of my relatives that aren't really market savvy and they're watching everything developing regarding equities, what advice would you give them? Should they jump in if they're not in? Should they stay in if they are in? Should they do anything different? Most Americans that aren't in the business have third parties doing a lot of their investing. Give me your thoughts on all of those.
Well, as long as the investment public continues to be drugged by free money being given by the Fed, stocks are going to go up. And so if you want equity exposure, if you want to play the game and hopefully you can get out before the music stops, I would buy a portfolio of companies shrinking their float, such as TribTams Float Shrink ETF. 100 companies that are shrinking the float, only using free cash flow to do that, not borrowing to buy, and that portfolio has been outperforming ever since we launched it in October of 11. Other than that, I would buy gold long term, even though could fluctuate here. Inflation-protected securities. We're debasing the currency. At some point, there will be a cost to debasing the currency. Right now, it's only resulting in higher stock prices because we're all being drugged. And when the...
All right, now, listen, Chuck, let me interrupt you. I agree. On the floor, the joke is Dow Jones or Mao Jones. But no matter what we want to say about it, a portion of it is on the back of some decent underpinnings in the economy. Not all of it, and I can't tell you what majority or minority of it. But if you've been long since March of 09, you could still get the check out of your account. Is there any way to protect and be involved for the average guy, that isn't necessarily going to be buying puts or using the S&P or the Dow futures for hedging? Should they be more diversified? Are bonds crazy if you're 55 or older? What's your thought there?
Well, I would only buy inflation-protected bonds if you have longer than a 5-year time horizon. At some point in time, we just, and second, I don't necessarily agree. My data, real-time data, shows that the U.S. economy, wages and salaries, is growing less than inflation in February. So that's a negative number. And our estimate of job creation for February is only 100,000, based upon how weak underlying February income data is. So I think
now,
we
Chuck,
have record stock prices.
Real quick, let me interrupt you again. Okay, we only have about 10 seconds left. The big discussion I'm having with many people is, hey, is this a notional high? Should it be adjusted for inflation? After really thinking about it, isn't that an exercise in futility? Isn't the reason Uncle Ben's programs are doing so well with the reflation trade pushing up stocks is stocks are a discounting inflation mechanism, are they not?
Yes. Absolutely.
All right, that's it. Yes, and that's the answer I was looking for. Chuck, you're a gentleman and a scholar. Thank you. Carl, it's all yours.